Taxation and compliance requirements for one-person companies or PERS. In India, taxation. 1. Income tax. OPCs are liable to income tax like any other business entity, with the owner's income from the OPC being taxed according to the relevant slab rates under the Income Tax Act. 2. Goods and services tax. If the OPC's turnover exceeds the GST threshold limit, which varies by state, it is required to register for GST. GST is levied on the supply of goods and services. Compliance with GST regulations, including filing regular returns, is mandatory. 3. TDS tax deducted at source. If an OPC makes payments that are subject to TDs, it must deduct tax at source and deposit it with the government. OPCs are also required to obtain a tax deduction and collection account number, and for TDs compliance. Compliance requirements. 4. Annual filings. OPCs must file annual financial statements, balance sheet and profit and loss account with the Registrar of Companies ROC. These statements must be audited by a qualified chartered accountant. 5. Income tax returns. The OPC's owner must file their personal income tax returns as well as the OPC's income tax return. The due date for filing income tax returns may vary based on the type of income and turnover. 6. GST returns. If registered under GST, OPS must file regular GST returns, including GSDR3B and GSDR1 as applicable. Compliance with GSDS regulations and payment of GST dues is essential. 7. TDS returns. If applicable, OPC are required to file TDS returns on payments subject to TDS deductions. 8. ROC annual compliance. OPC must comply with ROC annual compliance requirements, including filing annual returns and maintaining statutory registers. Failure to meet these obligations can result in penalties and legal consequences. 9. Directors' compliance. The owner-director of the OPC must comply with all personal income tax obligations, including filing tax returns and paying tax liabilities on time. 10. Statutory auditor. OPCs are required to appoint a statutory auditor who is responsible for auditing the company's financial statements and ensuring compliance with accounting and auditing standards. 11. Board meetings. Although OPCs have a single owner-director, they are required to hold at least one board meeting each year to discuss financial statements, approve the annual accounts, and address other business matters. 12. Record keeping. OPC must maintain proper records, books of accounts, and other financial documents in compliance with accounting and auditing standards. 13. Conversion requirements. If the OPC exceeds prescribed turnover or paid-up capital limits, it may need to convert into a private limited company, which entails additional compliance requirements.